All right, so gold is in this condition right now where it is testing some levels of resistance. We're gonna go over multi-time frame and open, high, low, and close today. So I hope you guys did get a chance to look over the notes. At surface level, it probably felt like they were very simple notes, but actually, if you can read between the lines of what I was trying to give out, it is actually the true essence of it. Now, what you need is probably demonstration of what I am trying to articulate, and I will try my best today to do that. That's MTF part one. MTF part two goes a little bit more advanced, and I think that's where you guys will benefit the most. But before that, we need to just get the basic idea of multi-time frame and how we can use our decision levels to pretty much replace them in over regular traditional SNR. So the cells today came in from a daily perspective. Um, this is Oenda, all right, and I initially had this level marked out right here for daily, and I had this level marked out for daily. Drop down to H4. So within this daily candle, within the daily candle, we can see that there is an H4 level that caused price to break out from this little range. It was derived from, I hope you guys can see it, a type 3 breaking a type 3, right? It's this guy right here breaking this guy right here. So I took a shot there for a retest. I don't know if it's gonna hold, but I'm still in the trade, and I will show you why. There's like three Ashish in this. I just added in like three different Ashish. I don't know if you guys are all the same because I only know I think I only know one. So I don't know what that means. Anyways, okay. So I got into the trade. Trend line came in right here, and I got in around a little bit up on the top when I saw rejection come in. H1 and 30. There was also something that I've seen. I've seen that M30 created a drop decision. So for me, that was something of value to consider, being that it caused price to push down, but push down where it pushed down to this M30 right here. Now you can see the M30 getting rejected. We're now in this little range right here. What I do and what needs to be done to manage this position is to see either of these levels getting broken. I'm already up in the top around here. If this level gets broken, which we can inspect using M15 as well, which I will jump into in just a moment, you can get indications of whether price is going to go up or down, even within this range. If I got in over here and I can capture, this is about a 50 pip drop. That's amazing. So let's go to M15 real quick. What led me to manage this position and hold it even more was, okay, the hour just opened up. The hour closed, the last M15 candle closed by breaking below this level. So let me just clear out these other levels right here. We can look at M15 specifically. It's a daily level, 730. This is M15 right here. M15 broke the last M15 candle of the H1 candle, broke below this M15 rally decision that took price to our H4 level. And what you can see is before the breakout, we had a rejection. Okay, great. After this first rejection, price did not if you're bullish, price did not continue down and then break the level that took price to this level. It didn't do that. So let's see that happening. It did not do that. It just actually tested, it confirmed the level above. All right, so I'm in the position. I'm just being wary, monitoring real time, and we'll go over what I mean by using absolute real time, which is very important. So I see that finally this level gets rejected. The main thing for me to I'm still in the trade. I'm not closing it off, even though I see that I have two rejections now at the M15 rally decision. The idea is you still want to see price break the decision level that took price down. And once again, we did not get that. I was prepared to close the trade when when I seen that, right? I was like, okay, we got a rejection. If I'm bullish, price would need to open. Price would then need to at least test this level or create a small little wick and then go up and break M15, M30 to give us signs of continuation to the upside. But that didn't happen. Actually, it actually broke below, giving me the indication that price wants to still go down, but price can go up after a breakout. That's what happens. Break and retest. A retest of what? M15, I was able to identify this level here. And even this, you can just mark your decision levels and observe what the relationship price is. So let's look at real time right now and see that, okay, we have two pieces of information now. M15, the first M15 candle of H1 created this rally decision. Great. It's a breakout on M15. Now what it's doing is that if you're bullish, price needs to open, then reject a level, and it's looking like it's rejecting this level. I'm still in the position here. Risk-free, no worries, no problem. I still need to see whether or not this breakout is only just a pullback or not. I'm still considering this. I'm still considering it bearish at the moment because this initial push is coming from my H4 level. So let's go back to M15. And even also, we can even look at it on M5, just for the sake of an example, right? We can see that on M15 we have this gap level, which eventually led out to this breakout right here, meaning this opening close right here. The result of this opening close caused this breakout. I actually looked at M5 and I seen that, okay, M5 actually also lines up with M15. So I can denote that again right here. Let me see, I don't really use M5 like that. Let's just use teal. So you got M15 here and M5 right here. My speculation is, or my observation was that this M5 led to this breakdown, right? And we also had indecision here, meaning that price didn't test anything here. Really, it didn't do anything. It just stopped, indicating indecision. It's just the spacing right here after the breakout. You wanted to find some type of support, which it didn't do, right? At least, test this gap level. It didn't do that. So for me, still making these little subtle observations, I'm considering that price is just in a range and it's pulling back up after a breakout. That's it. Derived from the H4 push H4 level. So I'm monitoring this this level right here. This could just be a retest of one of these. Could just jab up into this and then drop and then go. And even if you look at M5, um, there is also this level here that's being rejected. So price can continue down. And if you apply the whole idea of multi-time frame and decision levels even down to M5, you can find the same evidence of what we're trying to prove. It's the break and retest of decision levels. Stuck in this range right here. So just for now, we're going to be patient and see what the closures are telling us. One thing that you can consider is that, yeah, on the daily, I think it was somebody for Paltho or I think that's how you say his name. He was like, I think there is some uncertainty with gold right now because there was a breakout to the downside. There was this breakout here, the downside, and then it found support on the daily right here. And yesterday, everyone thought this big move was going to happen yesterday, and it actually happened today. So it actually ends, if the day were to end like this, we would look at daily and consider a few details. Is that we can see that weekly is rejecting a weekly type 1, but we also have to observe, what did this type 1 break? It didn't break anything, actually. It didn't break the current market price push down, and this push down didn't break anything. So altogether, we can just say that this is just going to be a range until we get a clear decision of what price is going to do. Same thing like what happened kind of like right here as well. There wasn't a decision that was made. We had a breakout to the upside, we had a breakout to the downside, and then what we seen for the following weeks was after a breakout, you expect a retest of a decision level. This decision level gets tested, but then it did not break out. That doesn't mean that that doesn't mean that you can't take positions. It just means that you take the positions as they come to your levels. Whether or not you hold them or not is a totally different story. It's just being able to firstly identify where the levels are. Okay, and so let's go into daily real quick and see if the daily were to close like this, what would we get? We would see that we have a breakout of a bearish type 1 decision level, and we would also have found resistance at this level. To design your multi-time frame paradigm, to design your storyline, market flow, direction, whatever you call it, it's all storyline, it's all multi-time frame. That's what it is. They all mean the same. Um, is that you would observe the breakout to the upside, then you would see that it found support here. So to go into design your protocol for next week, you have to see how the relationship of the closing price of today is how it reacts to the opening price of next week. If you see that Sunday, for me in my time, the market opens up at 6 p.m. Eastern time on Sunday. If I see that Asian market opens and it's going down first, then I'm going to assume that price wants to be bullish, and I will mark out first the breakout level right here, and then I would mark out the source level that broke out, right? So next week, again, if it could open, then test these levels and then keep going up. Or with this rejection, let's just say it closes like this and it closes below. Next week, what could happen again is it could open, sorry, it could open, test the level, the this level or even this level. It could test those levels and then continue pushing price down. Overall, you are bearish on the monthly, and I'll go over that as well. I want to jump around and confuse you guys, but you are bearish on the monthly. Bearish on the monthly. Weekly, you would be also bearish. Take this guy out. Weekly, you would be bearish. From this point, you're bearish. Weekly found resistance, but it has not yet confirmed the bearish breakout. How do you confirm the bearish breakout on the weekly time frame? Is seeing the breakup just confirmed, type 1 level right here. And it doesn't need to do that. Price doesn't need to always go from point A to point B to point C to point D. It doesn't need to do that. And we don't expect it like that. If we can understand that it doesn't do that, and price will have levels from the left it's going to initiate pullbacks for retest after breakouts, then we can understand and appreciate that even though we are overall bearish, these levels in the left are what's going to give us opportunities for either a retest or confirmation of the breakout actually being real or not, right? If this breakouts, to confirm this breakout, right? This type 1 being broken out, it found something. It found support to go up, right? What did we find? We found this guy right here. I believe it was on the monthly or weekly. Yeah, monthly. And then daily. H4, excuse me. Let's see if this one. Yeah, yeah. So it found support. So to confirm the breakouts of the weekly, we would need to see price. See, after the breakout, it found support. We would need to confirm that this breakout is true or not. And at that moment in time, price pulled back up into our source point, rejected it. We like to see 2 rejections at our key levels before we initiate a position. You can take this risk entry here, no problem. If you feel like you have enough confluence and something stood out to you. So let's see if there's anything that does stick out to us on that push up. Yes, there is, right? You have this daily level here that also has multiple rejections. Then you have this TL. There was another TL. There was another TL. I can't see it right now, but let's see. There was enough confluences, and also even on daily you can see, yeah, we got this level H4. There is also another level. It was H1. I remember taking this. On H1 we have level. Anyways, so daily we confirmed that, or actually weekly, we confirmed that this level was indeed something that we need to take in consideration. So if the daily closed like this, remember, we are already bearish multi-time frame. This is now we're gonna go into some of the foundational ideas of what OHSC is, right? We have a breakout here. This is a weekly breakout, right? This is a confirmed level. Confirmed meaning type 1 level being rejected right here. This candle confirms this level. It means that when price comes back into it, we can start looking for trade at this level. Confirmed, what it is just it signifies that this level is important, right? And it is important because it took the price up, and it confirmed it, and it took price up, but it didn't break price. It just took price. This confirmed level confirmed the pullback, right? So That's something that we need to take in consideration. It found this resistance here. Now OHLC for the weekly. If you're bearish, you need to open high, at least reject this level, at least reject even the level up above right here. And the more you focus on higher time frame OHLC spectrum, weekly, daily, or monthly, weekly, daily OHLC, the less you'll be confused and you won't have to use OHLC on H1. And I see that people are getting flustered with trying to combine OHLC with H4 and H1, and then seeing that H4 is being broken by H1, so then their thought process begins to say that we're bullish now because there's an H1 breakout of an H4 level. Um, the more you focus on the weekly time frame, I think is probably what I want you guys to focus on the most. Weekly OHLC is how the weekly opens and how the daily completes the week. The monthly time frame levels are powerful, but their uniform closures on the calendar do not line up with daily and weekly. Weekly is being ended by the day on the calendar just as a constant progression. Monthly closes in the middle of the week while the week is still forming. So that can confuse people and throw people off because if they see that weekly, if they have like a monthly level, you have a monthly level and weekly is like this and the body's right here, people are going to assume that there's a breakout, but actually the weekly didn't end. Say that it's Wednesday or Thursday, it can just come back up and uh it could come back up and reject it. Also, let's shift it into a weekly point of view. If this is a weekly and you have a daily, and dailies like this, you want to see if you have to let price settle itself with the closure. The closing price is what's going to tell you whether or not the level is being broken out or not. Um, so I like weekly and daily because a monthly takes forever to complete. Just to give you a cheap answer, the cheap answer is monthly levels are strong. They take forever to confirm. If you design your direction around daily, weekly H4, you will get a more precise intraday view of how you can take daily opportunities in the market. Okay, so let's look at what's going on right now in real time. So we had a breakout to the upside. Let's look at that. Clear the charts. So we also have a breakout here weekly. And by the way, guys, on a side note, the way I did this outlook right here, I want you guys to replicate this as to your best ability, is actually identify the levels where you currently are, what it broke, what it rejected, where it went again, where did it reject, and where you could be headed, right? If you go to, this is weekly, if you go to even now the daily, this is the daily, yeah, this is the daily. From that weekly analysis, I was able to determine that monthly and weekly are bearish. How can I prove that daily is bearish? And I did the same thing, exactly what I did with daily with weekly, giving me evidence that we are actually bearish. So any push up is just a pullback to go down. That's what gave me the inclination that for this week, that this push up, yeah, it's a push up and it's a decent push up, and we all took opportunities here, but it was actually bearish. Month daily opened up here and it sold off. And it gave me that confidence based off what I found on monthly, weekly, daily. All right, anyways. Okay, let's just go over these notes here. First of all, before the notes, does anyone have any questions or doubts of what I just explained or showed you guys? It's looking exactly same weekly view on top, yeah. Okay. All right, I'm gonna assume that there's no questions and we're gonna just proceed. This probably some of you have seen this already, but for the new guys, I want to emphasize this idea of OHLC, prioritizing it more on the weekly outlook and the daily outlook. Using OHLC to see how the weekly opens, using OHLC of how the daily opens will give us H4 intraday indications of continuation or reversal. H4 is important because H4 gives us the flow. It's during our waking hours, we can monitor this heavy candle, this H4 candle that contains H1 and all the time frames below. We can get information of that in the daily. So even though we prioritize HTF weekly and daily, we are from SNR, from the inception of SNR, from all of you guys who've been going through these courses, these mentors, they all talk about these higher time frames and um, you know, how uh important they are. They'll explain to you that price is gonna go from daily. This is daily, but let's just say weekly. Price is gonna go from weekly to daily, and they'll do something like this, and they'll show you that daily is gonna should be like this, something like that. They'll show you that. That's exactly what I'm showing you in respect with the idea of DLs. The break and the rejection of DLs will give us indication whether or not we're overall bearish or bullish in the weekly spectrum. So from here on out, why I keep saying the same thing about designing your picture, your storyline with weekly is so then your outlook for the week is going to be set for the coming days. I don't know if you guys ever studied SMC, smart money, algo, whatever, but those guys, Michael J. Huddleston, they'll say that um Monday, Tuesday, Wednesday, Monday, Tuesday, Wednesday is going to give you the high or low of the week. That's what they say, right? But now we have a more definitive reasoning of this. Now we can objectively view how this is happening. This is a fact. This is something that I've used since my days in SMC, and it's been phenomenal. It's true because if you are bullish, the market needs to create its low first. So if you're bullish, for example, price found something here, some support there, and the price came down and rejected your level, you would have some type of confirmation saying that this level is a key level that you want to focus on. If you're bullish, what you would need to do, so this is weekly, just consider this weekly. What you would need to do is monitor, observe how H4, H1, M15 are forming. Mainly, so we work backwards now. In the start of the week, Sunday, you mark your higher time frame levels, and then when the market opens, we work backwards. We start to observe H4. We start to work our way down and see what the market is telling us at our decision levels from the higher time frames. So you have a rejection. What we need to do is see how daily H4, H1 opens up, and that is how we can determine if we're going to be bullish or bearish or not. If you see that Monday or even just the Asian Open of Sunday or Monday opens and then goes up first, just backtest it, and I'll show you some examples of it. Just backtest it. If it opens and goes up first, just know that you're gonna have a bearish movement down. You can be 2 steps ahead. You can be 2 steps ahead of the market. Let's look at that. Let's look at that. And even though the pullbacks are deep, it doesn't matter. It doesn't mean that you have to wait 5 or 6 days for the pullback to complete and then drop. It just means that a pullback is in motion and you have to be prepared for price to come and give you the continuation down. So just let's focus on this leg. Let's focus on this leg here. Price created its all-time high. It was very confusing for everyone to trade this condition in the markets. There was no sense of direction where price was going. It was when Jerome Powell announced something, and there was just a lot of uncertainty. There was a Silicon Valley Bank that closed down. A lot of banks were closing down all over the world. There was just a lot of uncertainty, and that's when the BRICS nations started to initiate their own thing, and then everyone's reading about the US dollar collapsing. So we had this massive push up, and then by the way, guys, the US dollar isn't going anywhere. it's just going through the US dollar is just going through something that always goes through during times of turmoil, distress, and um, just economic turmoil or whatever, however you want to describe it. The US dollar is still the world currency, and even if China and BRICS, this is a side note, but even though China, Brazil, India, Russia, and they're creating their own currency, most of their transactions are still being completed with the US dollar. So, for that shift to happen, it's going to take decades, for it to be set in stone. But things are initiating, and the way money is being computed is changing, and we're just observing this. If you're now think about it from a crypto perspective and how everyone's like beginning to trade on that. The way money works is changing. But the US dollar isn't going anywhere, and gold is a safe haven for things for conditions for markets like this where the there where the world isn't in the it's always gonna do something, right? There's always some type of uh what is it? Battle between up and down. There's always that, and there's safe havens that give us those things that we can go back to for investors to um put their money in and secure their own. Banks do this all the time. They'll see that something is wrong, and then they'll go into natural resources and put their money there, and then that's just well, that story is different. But anyways, gold was going through an uncertain time, but eventually it broke out to the downside, and it broke out one of our key levels here. Right, this is a decision level. This is a type 1 level that's been respected a few times. And this is why I tell you guys that HTF levels are special, and they can be used just like so. Um, I wish I can give you a better explanation of why this phenomena um, is true, but I think knowing why they can be used is irrelevant. Just knowing that they can be used is probably more important for our understanding of this system, is that these levels, especially monthly, weekly, daily, can be used as a form of roadblocks. So what we see is that after this weekly breakdown, from hindsight view, we see that after it broke down, it did not continue going back up, right? This was the key level, right? Let me just refine it, make it tight, and show you even the slightest closure is what indicates a breakout, this key level. And I'll give you more evidence of that in just a few minutes. Um, so we expect a pullback in form of a bullish run, and even if it's a big, 100 pip, 1,000 pip move up, um, that doesn't mean if it's that doesn't mean that price is bullish, but it's gonna be bullish for a couple days or a week or two. It's just that this is a breakout of a key level, and we have this right here. This is a breakout of key level, and let's just see what this candle right here, um, what information we see on the daily after this breakout using OHLC. So this is that breakout. This happened on a Thursday, closed down below our level. That's great. So that means that daily broke out from a weekly level. It gives us information that this support level that we pulled from the weekly is being broken out. This means that we are now in a bearish market when we see that daily just broke a weekly level. We can expect lower pricing even though if we get a pullback. All right, so let's go back to weekly real quick and identify the level here. So daily. All right. Don't, when you do the markup, don't change, don't change this weekly level and then your refined level, don't bring this to here. Just leave the weekly level where it's at and then identify and look for the daily decision level that lines up with weekly. You can see that on the week daily time frame, there is also another level that caused a push down. But let me explain this right here. The idea of OHLC, right? That's what we're here to explain is this push up. And why didn't it just respect this level here, which it doesn't need to, but this break, why is this break, why doesn't this break indicate higher pricing, right? This daily breakout of this gap level, um, why wasn't it something like this from here? Bounce to go up. Why? Well, there's two things, and I've tried to keep it as simple as I can, right? Um, it's either you can take you can take the trade from the breakout level, or you could take the trade from the source level. This happens. Watch this video a couple times, mark it down, write it down in your notes. Try to keep it simple. Try not to know every single detail about the market. If you're gonna trade a system, trade one system and trade it as best as you can. Nothing else, right? We look at the source level and we look at the breakout level and we take shots here and we'll take shots here. That's just how I play my game. I do take losses here and I do take wins from here as well. That's just how it is. That's just you need to, when you see it happen a couple times, when you see it happen work for you, you begin to take those opportunities. And even if this, I think it was like 100 pip push down. It's about, yeah, 100 pips. That's enough for the one day, but even if you took this trade and you want to swing it, you will get signs of continuation of whether or not it's going to not hold or not. And I'll show you that after I explain daily real quick. So what you got to do is you can see this open and close level, it was confirmed, right? So yeah, that indicates to me that I should consider a sell here. I will. And in real time, I will consider a sell at this confirmed level. And that's just a fact. The fact that daily now closed above this level tells me that we are now confirming pullback into source level and I can start taking buys now, right? So this was Thursday Thursday breakout, Friday closed open, low high, closed below our weekly level. I'm expecting price to go up. So Monday didn't really do anything. We look at Monday. After the breakouts, even on H4, we can get an early sign that price wants to go up. This is H4. Let me see something. Just a moment. After the breakout of a major level, price opens up and it tests. Okay, great. It tests the H4 decision level here Monday at 5 a.m. It closes above this level here. Now that is a key level that we look at and consider. We have to make two observations. We have to make sure we have to observe where it's coming from and um what happens after, because we are expecting a pullback to the upside um regardless, because again you can take this sell, but for us to get signs of continuation to the downside we need to see um so daily, yeah. Okay. We need to see how the daily closes, right? The daily didn't close, so we can't get information that price is going to go down. What we do see though is we have a break above, price came down and it actually broke this key level, but it found support. So that's where people get a little bit confused, and the reference point, this level right here, I should have marked earlier, but um it's actually a support level. It's actually after the breakout, it found support here. Apologize for not marking that out. This was another key level that price found support at. So price found support there. If you took the sell, good for you. This is a great move down, but it's rejected this key level. This is daily H4. Um, and then the H4 candle around Frankfurt open, 1 o'clock in the morning Eastern time, it created a rally decision. So it indicates that price wants to push up, and then it continues to push up. Let's look at this. Let's look at this real quick. Let's rewind time and look at H4. Okay, did you see what just happened? Press play. The candle went down first and it shoots up. I don't know how it did that, but it did that, right? It tested that level and then it went up. So we look at H4. We have a breakout after I found our daily support. Then it created a type 1. H1 gives us that it broke above. Let's see something. Now let's try to bring in some more detail. Mm, 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 mm. Second. Okay. This is a decision level here. Okay, one thing you guys have to remember is that when I told you a decision level needs to take out another decision level to give us direction, you can also use DL break of SNR, traditional SNR to give us direction. So like you have this. This also gives us this break of SNR also gives us this also gives us direction. So DL break of SNR can also provide directional bias. Okay, put that in your notes. So so this open and close was broken. How do I explain it? Yeah, it's this one actually. Sorry, guys. Yes, 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 yes. So this open and close level broke this SNR. It gave us indication of a breakout. What did price do? Price pulled back up, tested this level here. This movement closed below here. This push up closed above here. So it also tests that level as well. And you can see that it lines up with this level here. So it sold down and broke, came back up, what we want to see is that this level again also has significance. It becomes a decisional level and it was broken. So bringing back multi-time frame back into the picture, we did find support, daily support, H4, rally decision up, breakout of a key level, while also creating type 1. We expect the price to open up and then drop. So let me mark out this open right here. Go to H1 and then we'll see what happens even on M15 at this opening price. H1, what did it do? It opened at this closure, the closing of the previous candle opened, came back down. Let's look at what M15 did and this little movement. Great. M15 tested the level. So you guys might look at this and say, well, M15 just broke out, but no. We don't use M15 that way. We just monitor how the H1 candle opens to retest the level using M15. Can't use these lower time frames to consider breakouts because they're going to confuse you. You stick to 80% of the time we stick to HTF and 20% of the time is LTF. So if HTF has the majority rule, then 20% is okay if we don't get it right. If you're okay, if you're right 80% of the time in the markets, then 20% of the time is minuscule to your analysis. Yeah. So we got the breakout. We expected H1 to open and then test the level, and that's what it did. Let's see, anything else? Is there anything on HM30? So this level here that I marked out on, was it daily or H4? Okay. This is H4. Let me just mark it and see if there's any refinement of that level on on H1. Yes, there is. And now you can see it's beautiful. Take away this box actually, or no, we can use it. This box, right? This opening close, right? This open to close, it broke out. Did it break this? Did it break it? Did it break it? Let me just look. It did break out here, but I want to see if it broke out here. It did break out. Even this right here, guys, is enough. This closure here is enough. But we can also see that the this push up closed above this H1. So there's two breakouts, and that's a little bit more evidence of price moving up. And this H1 just shot up. So moving along with a OHLC is that what I just explained, that after the weekly breakout, right? After this weekly breakout, we did expect the following week to open up. So Monday open low. This is the low, right? Open low, which we can trade. Get that through your head. We can also trade this movement down. It's almost 160 pips. Great, awesome. You can trade that. And then we buy. So designing your weekly swing with daily in H4 will allow us to get that precision of where it's going to turn from. Okay, so it turned, it broke, retest here. This is what, Tuesday, 5 a.m. Let's see where New York opens. New York is right here. So let's see. Sorry, that's to show you. This is our daily level that we want to see getting tested. Let's see if that happens. Does happen. This is our H4 level here. Is there anything on H1? H1. I don't see anything on H1. 30. And 30 gives us something. So being a little flexible, could get something like that. And it gives us the reaction that we were looking for based off of the weekly breakouts. We designed our idea that way. Now, yeah, we got this reaction, but we need to see how daily closes. If it closes above this level, that means that we're confirming a pullback. And this is how you can, if I were to put it in your notes or something like that, right? Identify. Yo, how many Ashish is there, man? You keep coming in and out, or there are like 6 of them. I don't know. Sorry. Okay. Um, identify source and source break. Source break. Let's price test your breakout level. If rejection, you can trade it. If breakouts, you can trade from it. So if the level is, if you have a level and it's rejected, you want to use OHLC, open high, find your TL, open high, find your TL. The market is going to be full body. It's going to be like this. When it starts rejecting your TL, you start entering the market after this rejection, and then you take an opportunity there. 20, 30 pips, full, book some profits, let the rest run. Awesome, great. Now, if we have this breakout, that means that this is, remember, this is our source break level. you can take a retest of this level and go back, take price back into the source level, right? Um, like I said, I will, after the breakout, I will take the shot at the breakout level, and then if that doesn't work, I will go let it, I'll take the counter trend back up into the source point. So you could have taken this sell. It didn't hold. Let's see why it didn't hold. It found support here, and it found support there, right? Look, found support here. So how you investigate the next candle for H1 is if price just all of a sudden, first we have a breakout to the upside, right? Price is breaking out. It's breaking out multiple levels, broke back above our daily level. And, that's I believe that's yeah, that's one of our key levels. Price is breaking above it. Um, H1 closed above it. So if there's a breakout, you expect a pullback. Let me see what this, okay, yeah. So after the breakout, price found resistance. You can see that got double rejection, back down, double rejection to a source point, and then it created a decision to go up. So the sell, if you were smart, you would have taken this 100 pips during New York 8:30, 9 o'clock in Eastern time. That's when news is heavy. If you were to book some profits, you could have been done for the day and call it a night. Or if you wanted to, you could have seen that the price rejected this key level. Why is this a key level? Let's look at why. Because it closed above a confirmed level. This H1 closed below a confirmed level. And see, this level is strong, got a rejection. You could take that sell down. So these are strong levels. You bring it across and you see it operates as support again. All right, great. Got decision to be made. It went up and let's go to H4. H4 closes above the decision level. So we get signs of continuation to the upside. So that means that the breakout level didn't work. It didn't work. It doesn't mean that you're overall fully bullish now. It means that there's going to be it's a pullback. Most mentors don't explain what a pullback is. They just show you that there's opportunities of roadblocks. This is probably the most simplest way that I can explain a roadblock to you is that if you have a breakout level and then put it in visual cue, if you have a breakout level, you take RBS SBR, support becomes resistance, resistance becomes support. Uh, you can take this trade, they say, right? But then they say, within this thing or within here, there are roadblocks that will cause this not to hold, or they'll say, yeah, price found support. And uh, pretty much essentially they'll say that this is a breakout to the upside. What I'm saying is you can take the trade from the decision level here and the decision level here, take the shot. If it doesn't work, take the retest back up into here and then continue going down. It's okay to take the loss because I take losses too, and that's just part of the game of being a professional day trader. And there's no professional there's no professional artificial intelligence robot that's 100%. Um, so just understand that even though I'm teaching you a very good, complete, strong, powerful system, I take losses too, and that's just part of the game. Um, yeah, I'm adamant for you guys to understand that. Okay, people that uh, are inclined to think that the next strategy that they go to will give them that. Um, but what I can tell you is that this is the closest to a high win rate that I've ever had ever. And just give it some time, and I promise it'll get easier. Um, okay, so moving forward, we see that we have a breakout. We get a retest of that level, and then price continues to go up to our source points. And we drop down from there. Right? So it's what did I just show you? Same thing of what I just showed you here. Take the level here. If it doesn't work, you can take it to this zone here. Let me show you an example of when the breakout level works. First of all, let's look at what's going on with gold right now. Gold, gold, gold. Oh, the sell is holding. Sell is holding. Yeah, it's good. It's looking good. My entry was at, I'll just post it in the chat real quick. Hold on. Sir, yeah, well, is holding. It found it found this level in the trend line. So entry here, it's holding. Um, for me, my take profit would probably be just the end of the day, whatever. I'll close it before market close. Whatever I get, I get. It's all good. Um, Let me show you an example of when the breakout level does work. Like right here. Can you guys all agree to me that this is confirmed to me that this is a breakout level? Can you guys all observe that? So this is the breakout level and this is the source. Make sense? Yes, no, yes. Okay, good. Good, good, good. All right. Yes, thanks. I just needed at least one response. If one person gets it, okay, great. This is a breakout level. What we monitor is for price to, let me just actually, this is also a breakout level. we at least want price to, we're going to monitor price for price to come here and go, or excuse me, come to the source point and go. That's what we would like to see. In this case, this worked, and I'll show you in the lower time frame how you can get evidence of that, how this breakout level will hold. So leave those levels where they are, and then you look for your daily. And the lowest I'll go to is H4. Right. So let's play price forward. You have a breakout, and because you have a breakout of a key level on the higher time frame, you're going to expect a pullback down. So we get this pullback down into our breakout level right here. Let me see something else. Fuck, sorry. That was it. That was the level. I apologize. But after the breakouts, so after the breakouts, we wanted to see price test level and see if there's something that's on the weekly. Weekly. Okay, all right. That's what it was. Okay, I'm gonna take this out. I apologize. One moment. Take this out. Weekly level inside the weekly level is daily. So this and this pullback breakdown. I mean pullback, breakout pullback into our breakout level, and then we take the buy. I believe the trend line was right here. I remember taking this as well. It was this guy, then yeah, that one. Take the buy here. But even if you didn't find the trend line, just knowing that price rejected this level using the OHLC theory, is that if you're bullish, after the breakout, price pulled back into your source break level, it rejected it. You should expect the price to open up going down first. So let's mark this opening price out and drop down the time frame. First of all, let me just denote this as open or daily open. Daily open. Okay. Tuesday, Wednesday. Tuesday. This side is Tuesday, this side is Wednesday. So yeah, we see on H4 is that the price opened. I'm just trying to see one. This is Owanda. So Owanda, it is 1 o'clock, 5 o'clock, 1 o'clock, 5 o'clock, 9 o'clock, and then with Forex.com, Saxo, Black Bull on the rest, it's 2 o'clock, 6 o'clock, 10 o'clock. can see that this 5 o'clock H4 candle rejected the key level, and then the following it rejected the level, right? In the following candle. So let's go to H1 and then mark out the open for this one. Uh, H4 open and monitor that on H1, right? You can see that the H1 candle opens and rejects the level, and then it creates a rally decision with the closure. So you are now back into you got you got the breakout, you got the pullback. Now you're back in line with the market flow. Like the direction, overall direction is that you're bullish in the higher time frame. We want to find evidence of that in the lower time frame, and so price. And also to get the detail here, when you're monitoring price, is how can you also get this earlier sign of continuation up until this point? Let me just take this out. Up until this point, price kept rejecting this level, and aha, there you go. This break right here. Okay, that break right there. If this is confirmed decision level that's been confirmed once and twice on H1, it broke. That gives us hint, an early hint that the market is going to reverse. And being that this is London, you have this London drop and then New York reversal, and then price continue to go up. So 12 market open. Again, I'm looking for Friday. This is Wednesday, Thursday. Okay, great. Wednesday close right here. If you're bullish, what is your expectation? It's the market should open and then go low. This is an ugly candle right here, but then see on 8:30. Uh-huh. Thursday opens here. So you have that open, low, and high, and then close. Because you're already bullish. Does that make sense, guys?
Yeah, yeah, yeah. Of course.
All right. All right. Thanks. Okay. So that is an example of how a breakout level can work. So there's now you have two frameworks, right? To make it simple, to make it simple, um, let me actually go down here. So now you have two frameworks. We identify the source break and we can take the level. We can take the trade from the source break. For this one, this is one. Or two is from the source if the source break does not hold. Right? The source break was broken. We can take the retest of the source break and then take the counter trend trade back up into the source and sell. So you guys need to take the shots here. Low risk if you really feel like, after back testing or forward testing, you see that most of the time, or for you, if you do take the risk here, you're not getting the result that you want, or you feel like you would rather just take it from the source. Low risk trade here, low, not too much size. Take the trade, and then if indeed this level does hold right here, if number one here it holds, if this level holds here, what's going to happen is it's going to create a decision level here, right? It's going to create a decision level. And then on the lower time frame, you will get a retest of it, and then it's going to continue going down. So that is up for our observation and examination to see whether or not this is like right now, since you're learning, it's like proving to yourself by observation to see that the stuff works. It's like you're trying to put a theory you're trying to prove a theory. And when you see the theory working, it becomes a fact. And then for me right now, it's a fact that it works. Um, for you guys, it's just now it's speculation, it's hypothesis, and it's just observing to see if it works or not. So I'm gonna actually take a screenshot of this. This is source break fail. And retest of source. Yeah, hopefully that makes sense for you guys. Let's do so that what I just explained to you guys was a little bit of OHLC theory. Now let's do some multi-time frame. What I'm gonna do is I'm gonna stop this recording and I'm gonna start